Hey everyone, happy Sunday evening and welcome into our latest Trade to Black podcast, Small Cap Sunday edition. I'm your host, Shad Dales. Thanks for checking in. Hope you've been enjoying these shows the last couple of weeks. We have a very diversified approach here tonight, I should say. We begin with a real estate company, followed by a beverage company, a very hot mining company, and finally, everybody's favorite, a cannabis company. Who is it? Well, let's find out as we welcome in our analyst and lead financial writer of the Dales Report, is Bill McNarland. Happy Sunday evening. How are things?
Things are great. Excited to be here. We did a lot of research this week to find these companies, and they're in different industries, varying quality levels. It should be an educational show.
You pulled out your diversification hat this week for a lot of these companies, 4 different industries, right?
And you know what's interesting? We had about 16 companies that didn't make the cut. So we looked at a
16.
lot of companies this week to get to here because we want to make sure that the companies
I
that
hear
we're
you.
looking at are really interesting, and also that we learn something from doing the analysis. And so a lot of companies we get halfway through and we just throw it off the desk and keep moving on.
All the more reason to be listening to more shows. And we got 16 companies that we missed, but we'll probably feature those in future shows. As usual, we're going to jump into this, but all views on the Trade to Black podcast and the guests on this podcast are purely opinion. You should not treat any opinions expressed by us or our guests as investment advice. And the views on this podcast are solely intended to be informational and are not investment advice. Before we begin with the 4 companies here tonight, I also want to mention our subscriber base to the Baked In newsletter has exploded this week. A lot of it is based on some of the latest research that you've done, including TrueLeaf, GTI, CureLeaf, a lot of stuff that you've learned, but you've seen a lot of action. And anything you want to highlight to get people to subscribe if they want to learn more of these reports?
Well, we're going to be having a lot of research coming out next week as well. There's a lot of changing trends within the cannabis industry within the last 6 months, and I
Yeah.
think that's something we're going to bring up on some of our upcoming shows as well. And it's a lot of positive trends, especially related to cash flows.
Yeah, tier 1, tier 2 companies. So if you haven't done so already, log on to thedalesreport.com. Actually, click in the description below here, and you can subscribe to our Baked In newsletter to get all the latest research. Again, this is everyday information for you, the retail investor and institution, to understand, all crafted together by our lead analyst right here, Bill McNarland. All right, Small Cap Sunday. Let's get into it. 4 companies. There's a mining company that we're going to dive into, an incubator, actually, a beverage company, everybody's favorite, a cannabis company, and also a real estate company. So, Bill, let's begin with that, which is a company called Yorkton Equity Group, which trades on the TSX Venture under the ticker symbol YEG. As I said, it's a real estate company. It's a Canadian-based company with a collection of multi-family developments, with real estate thriving in value over the past 10 years in the Canadian market. What can you tell us about this company and why it's grabbed your interest?
Canada has an issue. There's a mismatch between the amount of people immigrating to Canada and the amount
Big
of
time.
housing available, and
Big time.
it's a real issue. And so typically when you come to Canada, a lot of people, if they can't afford to buy a house or they're in transition, they move into a 2 or 3 bedroom apartment. There's been a tremendous amount of demand, more than the apartments we have available. And
Yes.
this has increased the prices of multifamily real estate significantly. And the bad news is many of us already missed this, but we have an opportunity, I guess you could say, for redemption to catch the trend.
Well, interest rates obviously have been a big issue, but as you said, right now, real estate is not keeping up with immigration. I know, being living in Toronto, I think there's 500,000 immigrants they forecasted to come into just the GTA next year alone, and across the province of Ontario, they only built about 300,000 homes. But the big issue in Canada is it's an aging country. So with that, as boomers are retiring, and gradually, if you start to see some of this demographic get older and pass away within the next 20 years, they've got to fast forward immigration at a rate that we're seeing where, like you said, real estate is not picking up. It was a country that was flat in population for 30 million for close to 30, 40 years. 40 million was reported last year, and they want to get up to 50 million within the next 10 years. So with that, and some of the risk factors for people to qualify for a mortgage, rate prices have just skyrocketed. Like, how much have they grown over the past 2 years?
Well, the what I was looking to find was what the one of the drivers is the rent increase, which takes in the interest costs and such. And so government statistics say that in the last 5 years that there's been an increase of 30% in rent. I don't believe that number from the sampling that I do. I think it's closer to 50%. So the costs have
Yeah.
significantly went up in different jurisdictions for the actual home costs, but more importantly, the underlying rent is significantly increasing.
Yeah, I think I said rate, I meant to say rent, but yeah, there's just I know in some places right now that in order to actually some people in Toronto have to put down as much as 12 to 24-month down payments to win a rental property in that market because like you said, there's no properties available. So, on the flip side, how does a company like that benefit from it?
Yeah, so this company we're looking at, Yorkton, they're based in Edmonton. They have properties in the province of Alberta and British Columbia. Interesting enough, the province of Alberta doesn't have rent control, so there's freedom to reprice properties. So what's fascinating about this is I went to go look at them and I said, wow, let's look at the value of the places, where are they located? And sure enough, they have 10 properties in Alberta and British Columbia that are multifamily and one development property. But what's so interesting is even though this company's assets are significantly going up, their revenues from rent are going up, the stock has actually been down 15% over the last 5 years.
Why?
So there's a big disconnect. I don't think there's enough people doing their homework. So I went through it very carefully. They don't have any analyst coverage to speak of. And so because of that, I think a lot of people have mislooked out. The secondly, I think a lot of real estate investors invest in REITs and they look for income. This
Yeah.
company does not pay a dividend. They reinvest all their earnings to buy more properties and to keep growing. So I think for those reasons, it's off people's radar screens. But yet it's a very intriguing opportunity when we look deeper.
Yeah, real estate is an issue not only in Ontario, but across the country and especially out in Western Canada as well. Because the first thing an immigration goes, they go to Toronto. And then after a couple of years and they've established themselves, they branch out and go to other parts of the country. But it's still the same issue. And as a result, like you said, rent prices have skyrocketed. Okay, let's go to the charts now. What was their revenue in the last 12 months that you found?
So the revenue was $8.3 million. They had revenue growth of 109% over the last 12 months. Over the last 3 years, their revenue growth has been 98.2%. So what's interesting though is when we look at where this is coming from, a lot of it comes in Canada. Remember, we have different accounting than the US. You can move values based on an appraisal on your balance sheet. But
Yep.
what's interesting here is they have a net assets, so real estate less the debt of $25 million, which is significantly higher than their $19 million market cap. So, in some ways, in this, you're almost getting 25% of the value of the real estate for free.
That's crazy. And the stock's down 15% in the last 5 years. Wild.
Yeah.
Anyway,
And
go on.
the other thing too is I don't think the appraisals typically you only can request your auditor to put up the values once a year,
Yeah.
and typically there's a big time delay in doing this. I don't even think their financial statements accurately reflect the values because I think they have went up since the last appraisals and last audits as well. So I
Yeah.
think there's significant hidden value here in the apartment buildings.
I think also it's important to factor into when you put in valuations of these properties a lot different than what happened in America 15, 20 years ago. Like the risk factors that a lot of the major banks take place and, the Bank of Canada, it's a lot more strict compared to what happened. And a lot of people will say, well, the real estate bubble is a big one in Canada. I completely disagree because as much as you look at different cities across the US and how the bubble burst, show me what property in Manhattan has done over the past 50 years, and we all know how expensive it is. And that's exactly what a lot of different places in Canada is because, as you said, the real estate is not keeping up with the overall immigration that's coming into the country.
Yeah, and I think, and also then the risk levels between the multifamily and the single homes is so different. The multifamilies, they almost trade like bonds. They just trade on cap rates based on supply and demand and what's there for it. So it's even de-risked further being multifamily than single home.
Yeah. Let's also outline their estimated 3-year CAGR revenue growth. What are you seeing?
Yeah, so the last 3 years they were up 98%,
Wow.
and and they keep the expenses pretty mild as well. They have 58 percent gross marginal profit. But the other thing, when
Strong.
you let's say you buy a rental property yourselves, the last thing you want is you want cash flow going out the door trying to make it better. They had positive leverage free cash flow the last 2 years.
Hmm.
So because of this, it's not like they're spending money to be keeping up these properties significantly. A lot of them are newer properties, and so they have free cash flow coming in.
Yeah. Well, we talked about the immigration landscape right now in Canada. Outside of that, is there any near-term growth catalysts for the company?
You know, with it, they're continuing to reinvest, but they have one main development project where they purchased the land
Yep.
in Edmonton near the Ice District, where the arena is,
Yep.
and that is I've spent a significant amount of time in that city, completely redeveloped this area downtown near the hockey rink. So it's a real up and coming area that they are looking for to develop there, which significantly, potentially, is a part of real estate that they could profit on significantly as well.
Hot spot tonight. If that team wins, on to the Stanley Cup finals, up 3 games to 2 as this podcast is airing right now against the Dallas Stars. Okay, finally, what was the credit score?
3.7. So there's no issues here. It's well
Okay.
covered by asset values. And then also there's positive cash flow.
Okay, moment of truth. Would you own this stock? It's down 15%, and based on some of the assets, it looks like it's been overmissed. It might be something people might want to consider.
Absolutely. I like the asset backing. I like the growth story. I familiar with the landscape and real estate in Western Canada, and I think this is your opportunity to go back and to potentially relive that, because we've seen what happened, but yet the stock is down.
Okay, good to know. Again, this is stuff that we are watching that we're interested in. This is not investment advice, but again, we're bringing stories to you that you may or may not be aware of. So, first up, we got our first check mark. That is Yorkton Equity Group. Next up, let's now shift to the beverage industry and a company called Flow Beverage, which trades on the Toronto Stock Exchange under the ticker symbol FLOW and on the OTC under the ticker symbol FLWBF. I see this product brand available in a lot of hotels across North America when I'm checking in. So, what can you tell us about this company, Bill?
Yeah, so quickly we'll just notice the brand chart up above on the screen. We can see that besides the hotels that you see it at, it's everywhere. You see it at Starbucks. You see it at you can even get it even at places like Walmart that are a lower entry point. So it's a very popular brand. It was started back in 2015. There was a gentleman who went to Burning Man. He noticed that there was a lot of leftover plastic water bottles.
Yeah.
Said, let's start a brand of box water, but also water that has a higher pH level, and this became Flow brand. It went public. It ended up coming with a high market cap of 434 million, and today's at a market cap of 13 million. So the question is this an unbelievable opportunity to buy a discounted a trend of a stock, or is this a trap?
It's amazing what psychedelics does. One minute you're at a concert at Burning Man, next minute you're taking a company public, right?
Yeah.
So, is this company interesting or is it not?
I'm going to well, let's look at the claim. So it's a high pH balance of water. An official statement from the Mayo Clinic is that this can neutralize acid in your bloodstream, and potentially there's hopes that it could prevent disease, but there's no research to verify the claims. So
Okay.
some people believe in this, some do not, and so there is no science to back this. There is the environmental concern. And I truly do know, I have met some people that only drink this brand of water for their 2 or 3 liters of water a day. Today, I notice in the grocery store flyers, I can buy 1 liter on sale for $2.99 for a liter of water. That's the pitch that is being made. So it's good now to go a little deeper into the financials and to see how this thesis has been working.
All right, so let's look at some of these financials. Looking at the charts now. First up, what they do for revenue in the last 12 months.
Revenue, they had $45 million.
Okay.
They didn't have any growth in the last year, but in the last 3 years, they grew their revenue at 26.7% a year. And
Okay.
over the last 5 years, by 50% a year. So that's a significant growth rate that they've had. And you can see all the stores that we highlighted that they are in.
Why do you think revenue was flat over the past year in comparison to what was growing in
It's
previous
a
years?
very competitive marketplace.
Okay.
So if I was to believe in this thesis that I wanted box water and higher pH levels, I do have other brands that I can purchase.
Okay. Any short-term growth catalysts that are notable to be paying attention to?
I don't see it. I'm more intrigued. I don't see the growth catalyst. Instead, I see the value. I can buy potentially a very popular brand that is discounted by 95% on the stock price. So my big question is still, we've seen the growth. We understand their catalysts. Is this a trap, or is this something that we want to purchase at an extreme discount?
Yeah, well, that's always grabbing the interest of retail investors. But gross margin, levered free cash flow. I think that's a pretty good indicator to learn more about based on what you just
It,
said.
this is how we're going to identify whether it's a trap or something intriguing. So their gross marginal profit gives us a clue. It's only 5.5%. So we
Okay.
think of that. If I go out today to buy that $3 bottle of water, they only have 15 cents coming off the top after their production costs. But in order to make this popular, you have to spend on the brand. So they're spending on SG&A, which is employees and also
Yep.
branding,
Yep.
salespeople going out, is 92 cents on the dollar additional to the production cost. So when I go out and buy that bottle of water for $2.99, if I decide to today, $2.83 goes to the cost of goods sold. But then they
Wow.
we'll call it invest, spend another 275 on SG&A. So for me to have the $3 bottle of water
It's
is
costing
costing
them.
them over $5.50.
Seems sexy
That's
and
not
trendy
a
when you look at
sustainable trend.
no. So current net income, what can you highlight?
Yeah, so the net income, they lost $48 million.
Wow.
We can see that it's same with leverage free cash flow. Last year was a loss of $25 million. The year before that, $26 million. So this is not a sustainable business when you sell something for $3, which is quite expensive for a liter of water, and then it costs them $5.50 to get it to me.
Started in 2015, you said, correct?
Yes.
Okay. Check. What credit score? What'd you get there?
So this is the first, I think this is the lowest we've ever seen. It's minus 19.2. So there's an extremely
Whoa.
high risk that they could have an insolvency within the next 2 years.
Wow. Pay attention, investors. Don't always think something that's on sale. Well, it's on sale for a reason, but that is great explaining and walking us through on why you should always proceed with caution with companies like this, especially when you're dealing with some of these penny stocks.
I
Moment of
think that,
truth.
yeah, there's another, yeah, I say at the moment of truth, I wouldn't own it. But I think the other lesson you identified, the one there too, and the second one is that it's extremely expensive to create trendy brands.
Yeah, no
And
kidding.
so if you see a company that you're like, wow, I love to be a consumer of that, see how much it's costing to get your attention to become a consumer.
All right. Well, all right. We got our first X. So one check mark, one X. Two down, two to go here on our Small Cap Sunday podcast. I said off the top, we got a hot mining company, an incubator. So let's now jump into commodities and a company that has really grabbed your attention, Bill. As I said, it's a company called Globex Mining. They're based out of northern Quebec, trades on the TSX under the ticker symbol GMX, and on the OTC under the ticker symbol GLBXF. So first off, are they receiving any coverage?
I couldn't find any coverage, and it
Okay.
took a lot of work to try to understand this company. I was
Okay.
initially drawn to it because I looked at their financial numbers came up on a screen, but after coming to understand it, I spent hours and hours and hours on it. I just became absolutely fascinated.
Okay. Good to know. So things we learned or have learned about mining company is timing is everything. And I think anybody that follows this space is like, well, no kidding, obviously. But even if you're right, when it comes to mining companies, they still are going to face a lot of challenges. You want to explain further on what I mean by this?
There's a number of challenges with mining. The first one is what everyone thinks of. You want to find a deposit, and then you have to prove up the deposit by doing the
Correct.
proper research. Um, but then let's say you have the perfect deposit. Then the problem always is execution. How much is it
Okay.
going to cost you to be able to to be able to monetize what's in the ground? But then the second thing you have to get right is you have to time the commodity pricing. So
Mm,
you want to make sure
easier said
that,
than done.
yeah. So if this mine you think is going to take 3 years, it ends up taking you 5 years because the execution is hard. So you're spending more money, but then maybe the cost of the commodity when you started was high, but then potentially it goes down. So you
Right.
have to time and plan everything in an excellent way. But if you get it right, it's huge.
A lot of what ifs, but this is why mining
Yes.
is such a polarizing industry for many. So as you said,
Yep.
hard company to understand, but then once the light went off, you said this is a great company. So explain to us what interests you and what was the turning point when you did your research.
Well, this is a mineral bank. So what do we mean by that? They have 248 properties in northern Quebec,
Okay.
mostly, that they paid for. And so these were bought at all different prices. They've been depreciated down. They're not really showing any value much on their balance sheet. And what they do is it's diversified. It's in precious metals like gold and silver. It's in specialty like manganese or rare earth, some base copper or lead metals. And what they do is they're a collector of properties, and they
Okay.
sit on them and they wait for people to come to them and say, you know what? All of a sudden, silver is high right now. I'm interested in your silver property. So what they do then is they say, okay, how about you go work my property? You spend the money. And if you find something, I want a payout or royalty based on what you do.
So AKA an incubator.
Absolutely. And so they get paid up front. So if you and I want to go work on their property, we have to pay them a quarterly rent, a significant rent. And if we do well, um, it's great. Everyone wins. So there's three options for them. One, you and I come mine on their property and it doesn't work. Well, they get
Yeah.
new data and they got paid. The second one is it does work, but our timing is wrong. Well, they still get new data and get paid. If you and I are great mining engineers and we score big time, the company gets a payoff as well.
So risk
So
is
it's
taken off
almost
the table for
de-risked mining. Absolutely.
248 properties, you said, in northern Quebec?
And they own them. So they have cash sitting in the bank. They own these properties. They have some public securities that they've been given. And
Yeah.
if someone wants their help, they can lend them the property. They can also sell some services to them. And they just go around and they buy properties when that metal is completely out of flavor.
Wow.
And then they just sit on it and they just wait.
Yeah, no kidding. Pays to own land, which is the
Yeah.
common theme here in our first and third stocks here tonight. Okay, let's move now to the charts. What'd you find as far as revenue growth over the last 12 months?
Yeah, so their revenue, they're keeping the lights on. If they don't have a score, they still have annual revenue from the previous years. They had $4.4 million in the last 12 months, and their revenue has been growing as well, slowly, except for the years that they have the big score, and that's what people want to own the company for.
So, like these transactions when they hit and hit big in mining, these aren't happening every year. These happen every couple of years or maybe even longer. But if you looked at, say, the last 5 years, is there any one year that's brought your attention that where they, like you said, hit one of these big opportunities? And if so, what was it?
Well, their December 2021 financials had
Yeah.
revenue of $35 million.
Okay. So a big difference.
Yeah, so that's almost a 10x off the normal revenue. So you can see
So,
when they have these, they have a score, and then they go out and just buy more properties in the business.
yeah. So that was 2.5 years ago. All right. Let's now shift to levered free cash flow. What'd you find?
Yeah, so last year, $2.8 million. So there's no
Okay.
concerns about them having to, they're losing money sitting there. And the year before that was 1.7.
Okay. Net income was what?
3.1 million. So what's so interesting too is in that net income there is no property appreciation. Being Canadians, they
Ah,
have the right to be able to go to their auditor and say, we want to mark up the properties based on an appraisal.
yeah.
But interesting comment from the CEO with owning all these properties, every single property they would have to go out and get a third party opinion on to bring to their auditor. And they're just like, the cost is just not worth it. We're just going to leave the properties at a low value on the balance sheet and just wait on this. So the properties are extremely artificially mispriced on the balance sheet for the positive.
What are some of the hot commodities in northern Quebec right now? Uranium? Is it lithium? Is it copper? Like you see a lot of these manufacturing automotive companies that are getting more and more involved with this space. But if you've got 248 properties, like this is definitely a strong focal point in this area for this industry. And really, it's not just about mining. It's about a lot of the, environment, initiatives that are being taken place by different governments and countries, and most importantly, let's just face it, whether you agree or disagree, accept it or not, electric vehicles are a thing of the future.
Yeah, so they have all kinds of different metals that are moving at different prices at different times. But even just on the most basic level, right now we are at multi-year highs of gold and silver.
Yeah, of course. Yep. Times are changing. All right. Final thing, credit score. What'd you find?
Yeah, so their credit score was 54.3. This was the highest
54.
that we've seen. It's because they're sitting on
54.3.
so much cash, and so they have current assets. So that's liquid assets of
Yeah, yeah, yeah.
28.28 million dollars. So and they
Wow.
have and every year they got money coming in above. They're not spending money on these properties, so there's no issue with their credit at all.
Arns, roll the siren. 54.3 credit score. That is an all-time high. Woo! Give me a sound effect for that, Arns. Okay, buddy? Let me hear it. All right. Let's now focus on our last company, which is everybody's favorite industry, it seems, cannabis and the cannabis industry. And it's an ancillary side of the industry, a company called Ispire Technologies, which trades and I do want to highlight on a senior exchange, which is a big advantage, as many know that follow the space of the cannabis industry. It trades on the NASDAQ under the ticker symbol ISPR. I actually interviewed their CEO a couple of months ago. I think it was 3 or 4 months ago, but current market cap 400 million. The company is based out of Los Angeles and has a factory in Malaysia. So first up, Bill, are they currently receiving any coverage? Ispire Technology.
Yeah, I found that there was two analysts that were submitting estimates to Capital IQ, so they do have some coverage there.
Okay. Latest earnings from back in February saw an increase of 30.7%, sales climbing to 41.7 million. And more specifically about these numbers was their vaping brands, which included a 149% rise from the previous quarter. So based off of that, Bill, this cannabis ancillary company, not only they focus on cannabis, but they also focus on tobacco as well. So what have you learned about the growth of tobacco? Because it's still a massive one, and how it plans to grow over the next few years.
Well, tobacco traditionally is still growing globally. It's about 2.5% long term is expected to be the
Yeah,
growth rate. So there is an opportunity there that they can move in with newer technology like vaping. But vaping has a growth rate. It's expected to be
massive.
13.5% globally.
Massive.
So they're still on a favorable trend, even though tobacco is slow.
All right. Well, as you said, vaping is supposed to grow as much as 13% globally. One of the biggest challenges for this industry over the last couple of years has obviously been the black market situation in Asia. Hit companies hard like Juul, and really it took a back step for the overall industry. And if you're building product from Asia, that's obviously going to be a concern. So one thing, as I mentioned off the top, and I do want to highlight, they recently opened a facility in Malaysia. It's an ISO and GMP certified facility consisting of 31,000 square feet. So it makes sense when it comes to cost to be operating in a country like Malaysia. And more importantly, just, to expand, obviously, your margins. But first thing I wanted to ask, Bill, with the GMP certified facility, which is great and answers a lot of the questions pertaining to some of those black market concerns in the past, is there any current challenges when operating in a country like Malaysia? What could you share with us?
I don't think there is. And I'm going to share that I've been to Malaysia many times. I've done business there.
Yeah.
I think a lot of people just aren't familiar with Malaysia. So let's compare it to something closer to home. When it comes to transparency or difficulty in doing business, we can look at a transparency index. So Canada's at 76 out of 100. That's considered high. The US is 69. Mexico is 31. I don't find it difficult doing business in Mexico. There's a lot of international companies that are there in Mexico, especially
Yeah.
from the US. There's challenges to recognize. You need experience, But Malaysia's a lot easier. They have a stable currency, a fairly stable currency, and they rank 50 on the transparency
That
index.
surprises me.
Yeah, so if you're open to doing business in Mexico, this is a lot easier than that. So I have no concerns
Mm.
about them having their manufacturing in Malaysia.
Good to know. Companies also partnered with some pretty big social influencers, including Nigerian hip hop star and songwriter Burna. He has actually an audience of over 50 million followers across all social media platforms. Also works with Snoop Dogg. So clearly, these devices are popular ones. All right, as we now look at our next chart, is there anything they're as currently receiving? I do think that Pablo Zuanich is providing coverage for this company. Is there anything else that you're seeing specifically for this company?
I was very interested. So something that their revenue is growing. They're up about 40% in the last 12 months. They're at the same, pretty close to the same price as they came as an IPO a year ago. So
Yeah.
not much has changed, but the company has improved. But there's volatility here for traders. If you look at their 52-week
Welcome to
high
cannabis.
and low, it's there. Like their 52-week range was $5 to almost $20, and now we're at the IPO price of 7. So if the company's improving, they're doing better than they were when they IPO'd. Yet there's significant volatility here for trading if that's your interest.
Okay, so when we talk about volatility and we talk about things being on sale and when to proceed, not to proceed. So, biggest thing that we look at, and that's next up, looking at our charts, is levered free cash flow. What'd you find?
Yeah, so they have gross margins close to 18% in the last year. The leverage free
Okay.
cash flow is something we have to come to understand. So last year it was negative 27 million, and the year before that it was positive 17 and a half.
So,
So,
what's that tell you?
well, the first thing I always go to check is let's look at some non-cash expenses like depreciation. That's not where it's
Yeah.
coming from. It's coming from mismatches between account receivables and account payables that I would want to get more clarity on. It's not necessarily a good thing. It's not necessarily a bad thing. It's just something that management we'd have to go to and come to understand more about.
Yeah. So, again, net income, gross margin, what'd you find?
So their gross margin is close to 18%. Their net income
Okay.
is negative 12.9 million over the last 12 months. But we're not concerned about that causing a credit problem. They have time to work their thesis. When we do their credit check, it's at 4.6. So they
Okay.
still
So,
have
that's strong.
time to work on their growth and still to execute on their catalysts and their thesis.
Well, near-term growth catalyst, I'm going to obviously say, is rescheduling. That'll open up some eyes, but yeah, it's a growing industry to say the least. So I think the biggest challenge for this space right now, as we all know very well in this platform, is legislation out of Washington. But when that day comes, we had an interesting conversation actually this week too with Larry Scheffler that's coming out on Tuesday from Planet 13. But some of the contacts that he has in New York, big dollars, big funds are going to get into this when the timing is right. So we all know that, which is encouraging, and that's going to benefit obviously companies like this. So, moment of truth: would you own this stock?
I'd want just to do some more research. I'm very interested in it. Very
I,
interested in the volatility, even though I'm not a trader. I just would want clarity on the mismatch of the account receivables and the account payable timings and why it's creating so much
yeah,
volatility. But that could be easily clarified by management. So when we find that out, we'll report back as well.
awesome. All right, this has been great. I think the big highlight here is Global X Mining. What was it, 54 or 53 percent credit score? Was that it, or not
Yeah, it was
percent, but
extremely high, 54.3. So I don't think we're going to necessarily see that anytime soon. So that also shows us that just because we learned a couple things, maybe three things today about initial impressions. Remember, we had to be careful with flow and about the brand.
yep,
Secondly, maybe we thought Malaysia would be risky. And third, maybe we think mining's risky. It doesn't have to be. So we have to look
yeah.
deeper into all these first impressions.
You ever been to Burning Man?
No, it's on my bucket list. Have you?
Is it? Well, look, that's an industry or a party, I should say, that's definitely becoming more and more mainstream. But
Yeah.
yeah, with regardless of like yes, it's obviously extremely important as far as this business is being done because you just said like it's a great idea, but long term plan, it looks a little skeptical at this point. But always interesting from some of the people that I've met that have gone there, and there's actually some pretty successful entrepreneurs that we'd be surprised that actually attend this event. But anyways. We'll be watching closely as well that psychedelic space, T minus 60 days before, and actually a big meeting this week, the first initial meeting between Lykos Therapeutics and the FDA, which is taking place on Tuesday. So we'll be providing updates with that as well. More research reports coming out in the cannabis space this week. You want to highlight some of the companies that you'll be launching this week?
We're going to finish off the large MSOs, and I think we're going to
Okay.
start into the smaller MSOs. We've been doing some work this weekend on MaryMed, which will be our first one to come out in the small MSOs, and then we're just going to continue on, planning to pace at 3, 4, or 5 reports a week are going to be coming out as we go through them.
Good stuff. So again, if you want to check out all those reports, log on to thedalesreport.com or click on the link here in the bio that basically redirects you to the Baked In newsletter to get all the information and the research that makes you stay ahead of the game. So we appreciate it. Leave some comments below as well. What'd you think of the 4 companies that we covered here tonight? And if there are any questions that you want pertaining to any one of them, reach out to us. We'll get back to you right away with some feedback. Bill, enjoy the rest of your weekend, and I will check back in with you tomorrow morning for another busy week here at the Dales Report. But meantime, thanks for joining us here on the Sunday Night Trader Black Small Cap Sunday podcast. Thanks, Bill, and thanks, everyone. Hey, everyone. Thanks again for watching. Hey, we're humming along, and it's all because of you and the audience and community that we're building. So again, make sure to smash on that like button and leave lots of comments. Who do we have up next? You let us know. Who should we interview? What companies? Is there anything you like? Is there anything we're missing? We're all here for you. Let's get on with each other and build this community for all of us to benefit. As usual, don't forget to subscribe to our channel because in the end, we wouldn't be here without you. Thanks again, everyone.